will take a lot of time on that. Okay, lot of time on that. When we do the things, okay, we have to, this is the section A, question number 2, ethics. One question will be there on the ethics, other thing. They will not give you the complete question, okay? They will not give you things which you are going to work it out, okay? I have increased the font, okay? I have increased the font, okay? And I will say, you have to plan, okay? Now, first is what they are talking about. Renshu develops gaming apps, okay? Gaming apps for which customers are encouraged to buy enhancements and add-ons to play more effectively. Okay, you have the, you can add some more features, okay? So you can show some more features. The company current financial is 31st December 2008. What are the things? There are 3 exhibits are there. 1, 2, 3. Exhibit 1, exhibit 2, exhibit. Every exhibit will have one question. Okay, every exhibit will have one question. First exhibit deals with, this is only a dealing. Okay, very quickly in the examination you have to do. Okay, they are talking about loan to customers. Okay, there are something related to loan to customers. Okay, the second is with respect to acquisition of the assets. Acquisition of set of the accounting for the acquisition of intangible assets that do not constitute a business. Is that what is the rule IFRS 3? IFRS 3, whenever you are making the thing, both the business should be similar. Then only things will work. Acquisition will work. Both the business should have similarity. Payments for the app, de-recognition of intangible assets. Describe the accounting. See the thing. Describe the accounting for de-recognition of. Now, once you have done, we got an idea that yes, these are the things. Now, immediately you have to recollect what you have done in IAS 38, intangible assets, all the things. Ethical issues will be there. This is the question number 2 that will be there. We have studied in chapter 2. Now, ethical issues, ACCA code of ethics, we have to write all those things. Okay, we have to. Most of the time it will be integrity and objectivity. Okay, most of the time. Okay, now, what is the question? See that they have given exhibit 3, 1. Okay, they have given exhibit 1 related to this. They have given exhibit 2 related to acquisition of assets. Okay, they have given exhibit 3 related to payment for the app. Now, they have given 3 questions. Okay, they have given 3 questions. And there is a 2 marks for the presentation. Okay, 2 marks for the presentation. The first question, discuss the ethical and professional dilemma of the financial account. This, he has some confusion. Okay, he has confusion. Think that you are in his place. Is that where whatever is there, write down. In overseeing the loans made to the customers and appropriate actions to be taken. Well explained 8 to 10 points. Well explained, 8 marks is there. Keep it in mind. Ethical and professional dilemma. One question, compulsory question will be here. The first question in the section A. Is the second one. Describe, discuss. See, here also we are talking about the discuss. Here also we are talking about the discuss. Here also we are talking about the advice. Whether the database and the domain name. See, we have not covered anywhere. Is a database and should be recognized as intangible assets. And how the purchase price should have been allocated in accordance to IFRS 3 combination. How many marks are there? 4 marks. 4 marks means maximum 5 points, not more than that. To the point. Explanation. You have to go discuss. Discuss means you should have 2 sentences, 2 or 3 sentences. Advice, Renshu on the accounting treatment of the payment for the app in the year ended 31st December on the assumptions that the amount did meet the recognition criteria of intangible assets and did not meet the recognition criteria. One is it will meet the recognition criteria, and the second one is it did not meet the recognition criteria of the intangible assets. Okay. Now, once you have done very clearly, the moment you are approaching the examination, you should be very clear what is coming, what is not coming, how it has to be done, how it has to be approached. Okay. Now, first, what is there? This is this is related to A. Okay, this is related to A. 9, I am telling you, you will be surprised. 90% of the answer will be in the scenario. Okay, 90%. Only thing, this is with respect to the B. This is with respect to the C. Question number C. Okay, this is with respect to question. Now, what they are saying, again, read the question very clearly. Discuss the ethical and professional dilemma, confusion for the financial accountant. Accountant is in confusion, that is overseeing the loans made to the customers and the appropriate actions taken, whether he has taken the right actions or wrong actions. Definitely, when you are giving the question, he has taken wrong actions. Something wrong has been happened. Now you have to make the correct decisions. Okay, you have to make the correct decision. This is the approach. Is that this is the approach we have to. Now coming to the point, the first one. What happens? Read. The financial accountant of Renshu. Every sentence start with separately. The financial accountant of Renshu company, ACCA member. Assume you are in his place. He is responsible for overseeing authorization of small loans to 500 customers for use on gaming app. Small loans, okay, means see what will happen. You buy and pay in 10 installments, you buy and pay in 12 installments, like that the offers will be there. Okay, Jammy Play gaming app name is Jammy Play. He has paid a commission based upon the number of loans granted in a period. He is getting some commission. He is giving the loans, he is selling the product, he will get the commission. Is it? The effective rate of interest on the loan is approximately 10.76. Is it? It will not be 1.76 or 10. Okay, we'll see. Okay, what we are saying. We are 1076. We'll see what is there. However, if the loan is paid within the month, there is no interest charge. Customers apply for short-term loans via online portal, which gives them an instant decision as to whether the loan is approved. Fine. Instantly, they will have we can do this in normal. Now you see the thing. When they are given this, keep it in mind. They are given in 2022, 4 years back. 4 years back, they have taken this concept. Is it right? Now, customers apply and they will get artificial AI systems which are subject to frequent cyber attacks are used in this process. Currently, the law on consumer credit in the jurisdiction in that country only allows such loans where the credit worthiness of the application has been checked. If you are checking the credit worthiness, then only we can approve the loan. Otherwise, we should not approve the loan. There are two groups of customers, Group A and Group B, who have different social demographics. The financial accountant has the full knowledge of the AI system and knows that the credit approval is positively biased. They say positively biased. It is biased with respect to in the favor of Group A. He defends this practice by saying he is saying that okay, it is a bias. It is good that it gives Group A chance to improve their financial position. Group A is known to have a less wealth than Group B and is less likely to be able to afford to pay back with the loan within the month. See, he is giving preference to Group A, but in actual reality, Group A is less wealthy. And Group A is default is there. These are less likely than Group B and is less likely to able to afford to pay back the loan within the month. Means they cannot see when you know that this group is not trustworthy, not credit worthy, then you cannot give favor to that. Okay, you cannot give. There is something because what's happening in the beginning, they say that he will be paid on the commission. Okay, he will be paid commission. Where he has said, it has been said here in the line number 3. I will put 1, I will put 2. Paragraph number 1. he is paid a commission based on the number of loans granted in the period. See, people who has financial difficulty, they will ask for loans. That is the common psychology. Okay, if you are having when I can afford to pay, why I will go for a loan option? I will not go for a loan option. Is it? I will not go for it. Now, what is the question now? Question now is whether the for the financial accountant in seeing the loans to customers and the appropriate action taken. Is he correct or he is not correct? Tell me.
He's not correct.
He is not
It's
correct.
because of objectivity.
Yeah, because of integrity and objectivity. Is it? He is not correct. Now we have to develop. See, there is no right answer or wrong answer. Okay, there is nothing like you have to write like this or you have to write like this. Okay, you have to write. That's the varying. You have to make a point that how best you can write. Okay. Now, what they say, artificial intelligence systems which are subject to frequent cyber attacks are used in this process. Currently, the loss of consumer credit in jurisdiction only allows such loans where credit worthiness of the application has been checked. See, the rule of the land, we are working here, you have to follow the rules of this country. The rules of the country say that you have to give the loans only after it is been checked. But accountant is doing wrong thing. Accountant is doing wrong thing. Accountant, what he is doing? He is giving loans as per his wish and will. Okay, this is the most critical part. Okay, you have to. This is the most. See what they say again. Artificial intelligence systems which are subject to the frequent cyber attacks are used in this process. Currently, the loss on consumer credit in jurisdiction allow only such loans where the credit worthiness of the application has been checked. Read. The most important thing is understand, read, underline it. What is there, what is not there. Then again, you go in the examination also, first you have to understand. Then they say that yes, again you relate it. Whether the financial accountant is seeing the loans made to the is appropriate or not. See, students, what they will say, they will not have patience. Immediately they will start and they will start writing. No, read, understand, take your time, plan within no time, 1 minute, half a minute, you have to plan. That the rule of the land says that you have to follow the rules. The accountant is not following the rules. He is giving the loans to the high credit risk people. Because of that, he is paid on the commission on the number of short-term loans. You have $500. If you give 10 customers also, $5,000 will go. Is that? You don't know. It is online. We don't know who is where is he. You are giving on a credit card basis. Whether the credit card will be active or not active, we should think like that. When you are doing the business, you are doing the things, you should also always think in the various parameters. You will have a broader outlook, various things. Only thing is the things you should move. Okay, once you start, you have to move by writing. Are you clear about this?
Yes.
Okay, now. What they say, what is the most, I will write every point and I will change the color. Okay, I will change the color. What we have to do, the first one, point number A, the financial accountant. Okay, what financial accountant has to do? Tell me. Financial accountant must ensure, okay,
He has to follow the ethics code of conduct.
It must ensure that artificial intelligence, okay, AI, I am writing AI, but you write full system should comply, okay, should comply. Is it complies with, with applicable. Is it right? Applicable. Which applicable laws and regulations. Are you clear about this?
Yes.
Is it? This is the fundamental principle. Okay, what they say is that means that it says that the system, okay, the system, accounting system, very simple. Is that the accounting system? Okay, account must take into account. There is nothing like that. Is it right? You have to be very clear. Must take into account is that the loss of consumer credit. %90 of the answer is it. Is it? This is the fundamental principle of professional behavior. Are you clear about this? Now, wherever you find that these are important points, either you underline it or you keep it in bold. Okay, either you underline it or you keep it in bold. Fine. Now you can put as you wish. Okay, is that now? What we have to do? They are talking about that. They are saying that cyber attack is there is a artificial intelligence which are subject to frequent cyber attacks. Is that the frequent cyber attacks? Is that artificial system? Artificial intelligence. Okay, AI. Okay, AI is existing AI. Existing AI. Okay, existing AI system. Okay, existing AI system is subject to cyber attacks. What we have to say? We have to say that is that we have to say that it should be robust. The system, the AI system should be robust. Anything else you can write? Robust and secure. Okay, robust and secure. Okay, robust and secure against cyber attack. Okay, against the cyber attack. Anything else is given against the cyber attack. That's all. Next, anything? Okay, now coming to the accountant perspective, what accountant is doing? Okay, it is now accountant is doing right or wrong?
Wrong.
Wrong. Okay, when accountant is it the accountant actions, the accountant actions is totally unacceptable. Is it right? Is morally unacceptable. Is it? To provide credit. Okay, to provide credit. To group A. Is it right? To group A. Fine. We are not doing anything. Is it? To group A. Because why? The probability that they cannot afford, the probability, is it right? The probability that they cannot afford to pay. Okay, to afford to pay. It's only English matters. Keep it in mind. Is that only English matters? They cannot afford to repay repay loan, okay, loan on time. Okay. He is giving a wrong justification. What he is saying that if you give them loans, their financial health will increase, okay, their financial position will be better, okay. We are not talking about what is it that it gives he argues that accountant, okay, accountant argues that by giving loan, okay, by giving short term, by giving loan, is it the group A customers, okay, group A customers, they say financial position, okay, financial position will improve. We are doing business for ourselves. We are not doing business for other people. Are you clear about this?
Yes.
But what will happen? What will happen if the customer defaults? If the group A customers defaults, group A customers defaults, customers who took loan, okay, who took loan defaults, what will happen? What will happen? Our
The
receivables,
business is losing.
the receivables will increase. The receivables will increase. Receivables will increase for whom? For Renshu and company. Okay, for Renshu and company. Are you clear about this? Small things. Now, anything else? Now, what is the alternative? We have to give the alternative also. We have to give the alternative. The credit risk, okay, the credit risk with group A customers, is right, with group A customers is high, okay, is high. Because of this, if loans are granted, is that if loans are granted, okay, what is the alternative? The accountant, okay, the accountant should charge higher rate of interest. Are you clear about this? We should not lose the business also. Okay, we should not lose the business also. Is it right? Now, okay, the accountant should act. The accountant, okay, the accountant should act with integrity. With integrity. Okay, with integrity and state integrity, okay, in all professional and in all professional and business relationships. Are you clear about this? Underline this. In one answer, underline 2 or 3 words. Whichever you find easy, whichever, there is nothing like you have to think and you have to say that I have to do this, nothing is there. Randomly underline things, okay, randomly. What I have underlined? I have underlined integrity. Is it? Because we are talking about this. I underlined professional behavior. Okay, now when you are doing this, what is the advantage? See the thing, we should also be very smart, okay, when we are doing this. When you are doing this, automatically we are attracting the examiner attention. Examiner will see that yes, the student knows what is important, what is not important. What is important? Any two. We should not underline more than 2 or 3 maximum. Is it? We should not underline more than 2 or 3 maximum. Are you clear about this?
Yes.
Now, what the thing we have to what they are asking, we are read the question. Overseeing the ethical and professional dilemma. What are the appropriate actions? They are saying that we should identify the things, and we have to mention what are the actions to be taken. We have given one action, okay? We have given one action. Maybe 1 or 2 actions, okay? No, we should not waste time also. Is that now? What is the other things we can do? Group A and Group B.
But he didn't mention anything related to Group B.
Okay, no problem. But what you are doing for Group B, the same has to be done for Group A. There should not be any discrimination.
Okay.
There should not be any discrimination. Okay, they should not. What if you are going to be there? What you will do? Tell me.
I will not have 2 groups.
Yes, okay. What you will do, okay? The accountant should ensure that. Very simple. The accountant, okay? The accountant should ensure that the same criteria, okay? The same criteria should be adopted
For all customers.
for both the groups. Okay, for both the groups. Okay, for both the groups. In order to be fair. Okay, in order to be fair. Okay, next. Anything? The company should have systems, okay? The company, Renshu, okay? Renshu. I'm just giving you more ideas, okay? More. Renshu should have Renshu company should have systems, okay? Should have own systems. See, you for your company, you will have your own system, credit worthiness, okay? Should have systems, is that which is that which can be Renshu should have systems which can evaluate the credit worthiness of different groups, but they can evaluate the credit worthiness of different, but what should be there? But the outcome, the result should be unbiased. You can have your own system. Okay, fine. I will tell you this. That okay, demographic is there. If there is one location, one customers are there. Another location, another customers are there. Small businesses are there. Big businesses are there. We have to promote small businesses. We cannot say that we will not sell products to small customers. We will not sell products to the people who are on the default. We have to take everyone into consideration. Always have positive thing in the mind. Okay, always have the positive thing in the mind. So what we should have? We should have You should have a systems where you are going to evaluate, but there should not be any discrimination. Anything else? There will be difficulty will be there. Maybe it may be difficult. Okay. Anything else? They are talking about social demography. Okay. They are talking about different social. You have to come. Means different regions. Okay. Different regions. Anything we can write on that? It is it? It is possible.
Should they take this into consideration
100%.
when they assess creditworthiness?
Yes, exactly. Why? See, is it right? I will tell you. Okay, there should not be any. Now, what you have to do? It is possible to create segments. Okay, they are talking about segments. It is possible to create segments based on social demography. Okay, but you can create it. Okay, but the accountant. Okay, but the accountant should not take advantage of this. Okay, but the accountant should not take advantage for this. Is it? No. What is the problem? Now you have to conclude it. Okay. Now wherever there is a financial transaction, there is a self-interest. You have not studied auditing. If you have studied auditing, you will have. Wherever there is a issue of finance, amount, value, it is a self-interest. He is taking into consideration, he will be paid commission on the number of loans. Okay, he will be paid. The accountant, very, very straightforward. The accountant is paid. What they say is paid commission. Is paid commission on based on number of loan sanctions. Number of loans granted. Okay, number of loans granted in a period. He is acting in self-interest. He is acting in self-interest. Okay, he is acting with self-interest. They have mentioned I have a doubt, but we cannot do anything. Okay, they are 1076% per annum. Okay, 1076% per annum. Okay. Is it on a loan interest and on a loan interest? Okay, on a loan interest of 1076% per annum. Are you clear about this? Okay, I will write something. Are you clear about this?
Yes.
Now, okay. Now, if what happens, assume last one. If what happens, if the management says that you have to do this, what is the role of the accountant?
Not to follow.
Not
To
to follow.
object.
Yes, not to follow. And if the company policies, is it right? If the Renshu company policies, is that credit policies remains unchanged. Is it remains unchanged? Is it? It's very important. This is the way you have to end the question, end your response. Okay, it is the way you have to end. Is it right? If the Renshu credit policies remains unchanged, okay, the accountant should consider should consider ACCA for advice. Is it for advice and disassociate? Okay, disassociate. Okay, and disassociate from the company, from Renshu and company. Are you clear about this?
Yes.
Okay, read. Now, we see very simple. Unless until we don't develop the thing. You can develop your own answer. You can develop your own, but you should not spend 8 marks means if you take 8 marks, I will say 8, not more than 12 minutes. Okay, not more than 12 minutes you have to take. Very simple. Quick. You don't say, see, we have given some more responses. Give 1 or 2 responses, done. We are not talking about we have to tell them the complete story. 1, 2 responses. We are talking about actions. Take 22 actions, give it up. But you have to develop. Is that you have to develop the thing. What we are doing, if you ask me, is it right? We have shared that what is the AI system. We are talking about the existing AI systems have cyber attacks. Then we say that accountant actions is morally unacceptable. Then we say that if you are giving group A customers loan, if they default, credit risk will increase. Then it is a accountant is not doing on integrity basis. Then he has to be fair. Then accounting systems, there should be accounting system should be there. Is that within the company? Fine, you have 2 different customers, but the result should be fair enough. Okay, the result should be fair enough. Is that if he should not, if you are having social demographics, have a two different policies, but the result should be same. If the things are not under control, definitely is not under control. You should not be associated with the business. Are you clear about this?
Yes.
Every session,
Sir, you have to also tell us how to divide our time based on the questions in the exam.
yes, okay. See that, okay? Now, how much is there? How much is there? Very simple, okay? Very simple. Is there? How much is there? It is, see, it is how many marks are there? 20 marks. Okay, 20 marks are there. Each mark is 1.58 minutes. Okay, each mark is 1 point. If say 8 marks, take 2 minutes because you have 2 marks. How many minutes you have to take? We have to take 15 minutes. 8 into 2, 16. We have taken 1 minute off. We have to take how many minutes? 15 minutes.
Okay.
Okay, if it is 4 marks are there, take 4 into 8. Maximum how many minutes? 8 minutes. 6 are there. How many minutes? 12 minutes. time management is very important. I'm very confident about you can do this. The only thing that people will complain is time management. Now, I will give the solution for that also. The moment I will say, okay, subsequently what I will do, I will and you type it so that your fingers should be moved. Are you clear about that? Because it is 8 marks, we have given a substantial. Anywhere we have not given something wrong. To the point we have to write. I know in the examination we cannot, we will, it is hardly to get these things into consideration. But whatever is there, write down to the thing. All the time, keep it in mind. This is very important. Read the scenario. The moment you don't understand, read the scenario. Automatically, if you relate our response to the scenario, we have taken one sentences from the scenario and we have developed the answer. Is it clear to you?
Yes.
Yes. Assalamu alaikum Bishara, how are you? Okay? Fine. Okay. Yeah, I have seen now only, dear. What can I do? So sorry.
Okay.
Is it? Once I have completed, now I see the screen who are there, who are not there. Okay. Fine. Now, very interesting. See the things. Now, see the question number 2. Understand the question. That is the reason when I am teaching you, I will ask you to read. Reading is very important. Whether the customer database and domain names should be recognized as tangible, intangible assets, and how the price should have been allocated as per IFRS 3 business combination. What is the rule of IAS 38 intangible assets now? Okay, now read the scenario. This much is the scenario. Scenario is not, it is only 4 marks. Renshu purchased a company which acquisition comprised of customer database and number of domain names which do not constitute a business. Therefore, Renshu has to allocate the purchase price to individual identifiable assets in with respect to IFRS 3. This is something related to consolidation. Understand point? This is something related to consolidation. But IAS 38, see the thing. They have taken chapter 5. They have taken chapter 5 intangible assets plus they combined with other concepts. The customer database relate to the contractual arrangement whereby Renshu receives commission for referring customers to online websites. The customer database is that Renshu either receives upfront payment for every customer to the gaming websites or it will receive the share of revenue based on the usage. The acquired assets also include number of domain names, intangible assets, okay, for websites which have gaming content. Renshu has arbitrarily allocated purchase price for the company to the 2 intangible assets on a 50-50 basis. Question number B, I will write response. Read once again. They can arbitrarily allocate the purchase price, yes or no? Or there should be some rules are there.
Yes, there should be rules.
Which rules?
For intangible assets?
Yes.
Intangible assets are not monetary.
No, how you do
Right.
the valuation? Asset, this is a recognition of asset. It is giving you economic benefits.
Economic benefits, and the cost should be, we should be able to measure the cost
On which basis? Which basis? We have
fair
done
value.
100%. Fair value basis means what you have to write? You have to write IFRS 13 also. You have to mention IFRS 13. Are you clear about this?
Yes.
You have to catch. We cannot see arbitrarily. I cannot say that yes, this is the 50-50 basis. No, we have to, various things are there. What other things are there? If you ask me, is that you have, see, there is you have, what are the things? You have a database is there. This is the one thing is there. You have a database is there. You have that domain names are there. Okay, 2 domain names are there, which do not constitute the business, but they have to allocate the price to individual identifiable assets as per IFRS 3 business combination. When we are talking about IFRS 3 business combination, there you have to mention on which basis you have to do. We have to do on a fair value basis. Is it? Now these are economic assets because it is generating contractual cash flows. It is generating contractual cash flows, and based on that, it has to be identified. Man, most importantly, they are acquiring. They made an acquisition. If they are making an acquisition, you are paying for that. You are paying for that. When you are paying for that, you have to write to identify non-intangible assets. Okay, it is a complete revision for intangible assets. Every question
Arbitrarily means that they made this decision on their own, right? With no explanation or anything.
Yes. Can they do that?
No.
No. Is it okay with you?
Yes.
Everyone is fine? Now, I am doing a complete revision. Every question will have a complete revision. Okay, every option will have a complete revision. The more we do practice, the more the things will be repeated. Is that Renshu company? Always mention, okay? Renshu company. Is that Renshu company? Is that they have the right, because they have the right to receive future cash flows because under the contractual agreement. Is that under the contractual? Renshu companies has a present right. Okay, present right to receive. Okay, to receive contract, receive future cash flow. They are receiving some way. They are receiving the future. They have mentioned that they are going to receive the cash flows. Okay, receive future cash flows. Is it under a contractual arrangement? In relation to, is it in relation to what we are specific, is it right? In relation to the customer database, in relation to the customer database, and is it in relation to customer database as per IAS 38 intangible assets. Okay, as per IAS. What is the definition of IAS 38? Any idea? Anything? IAS is a
That it is, it should be identifiable.
yeah is a IAS 38 intangible asset. Okay, intangible asset. Revision is there. It is, keep it in mind. Should be recognized. Okay, should be recognized. Okay, should be recognized as it is probable, as it is it right? It should be recognized for, it should be recognized for what? For the customer database. Okay, for the customer database. Simple language in your own English, write down. No use of complicated high level. Okay, customer data. And as it is probable, is it that the expected that the expected future economic benefit is it, will flow, is it, will flow to Renshu. Are you clear about this?
Yes.
This where we have done for whom? We have done for customer database. Now we have to tell about the domain names also. Is that we have to tell about the domain. Renshu also, okay? Renshu company. Write the name. Without writing the name, don't. Writing the name and IAS, IFRS standards makes the presentation effective. Don't, these are the key things these are the things we should keep it in your checklist. Okay, we have to do this. Renshu also acquired. Renshu also acquired. What they have acquired? Domain names. Is it? Domain names, okay? This acquisition, is that this for websites, okay? For gaming, domain names for gaming content. Okay, domain name. What we have to do, tell me. This will satisfy IAS 38, yes or no? Acquired.
This acquisition.
Yes, they acquired. Is that they acquired? Okay. When they have acquired this acquisition of domain names, is that this acquisition of domain names will satisfy criteria, will satisfy the criteria of IAS 38. First time you are writing, you write full. Second time you are writing, you can write only IAS 38. Okay? But first time you are writing, see the thing. So follow the rules. If you are writing first time, you write full. If you are writing second time, third time, you just write IAS 38. Okay? And therefore be recognized as an intangible asset. Intangible asset is, we cannot identify when it is internally generated. Okay? Intangible asset should be identified when it is acquired. When it is purchased, then only we can identify intangible asset. Internally generated intangible asset it should not be recognized. It should not be recognized. Now, coming to the last point, okay? Coming to the last point. What they say? The arbitrarily. Is it? The arbitrary. Is it the arbitrary? Is it the arbitrary allocation? Is it of the purchase price on a 50-50 basis is not in accordance with IFRS 3 business combination. Is it? It's not. The new purchase price of domain names is it the new purchase the domain names, is it? Allocation should be done separately. Is it? Allocation should be done separately. Okay, allocation should be carried out separately. Okay, with allocation should be done separately. Okay, with reference to individual assets. Okay, with reference to individual assets based on IFRS 3:13. Okay, IFRS 13 fair value measurement. Is it? Are you clear about this?
Yes.
Now you see the thing. This is for 4 marks. How much we have done? This is the way you have to manage your time. Read each and every question very precise. Is it? Read. First we are talking about the customer database. Then we have talking about that it has to be recognized as a intangible asset. Then we have talking about the domain names. We have made that there should not be arbitrary pricing. It has to be done as per the IFRS 3 business combination. It is better to do it on a fair value basis rather than 50-50 basis. Is it okay?
Yes.
Okay. Now, what is the next one? They have 2 questions are there, 6 marks. Okay, little bit more. 3 we have to allocate 3 marks and 3 marks each. Okay, we have to allocate 3 marks. What they are saying, according to the treatment of the payments for the app, on the assumption that did the meet the recognition criteria or it has not met the recognition criteria. That's all. We have to be very advised. We have to advise whether it is meeting recognition criteria or not meeting recognition criteria. Read the scenario first. What we have to do? Yes, Rinath, tell me what we have to do. Tell me, right or wrong. Think and tell. You have to start. You have to start. That's very important. I will take your inputs and I will draft it accordingly. IS 38, chapter 5.
Yeah, I'm very lost, to be completely honest with you.
Revise, chapter 5 revise, okay? Chapter 5, everything, we are not taking anything more. We are not, first you have to tell about IS 38. Okay, IS 38. What IS 38 talks about? Is that IS 38, intangible assets. Plan. Okay, this is the first question. It makes things. This is only the first question. We will get things in order. Okay, first you have to mention what we have to mention. What is the rule of IAS? IAS intangible assets. Okay, is it requires an entity to recognize. Okay, to recognize. Okay, to recognize if it is probable that the future economic benefits is it will flow to the entity. Very simple. Will flow to the entity means which come to the entity. Okay, which will come to the entity, and the cost and the cost of the asset can be measured reliably. Okay, this is that. Now see that they are putting so many things. What they have mentioned, they have done research and development. We have done research and development. Research cost should be expensed, development cost should be capitalized. Okay, research cost should be expensed, development cost should be capitalized. Okay, research cost should be expensed and development cost. They are talking about the thing. If it is not recognized, if it is recognized. Okay, if it is not recognized, if it is not. Now coming to the point, the first point, if it is not going to be recognized. What they have mentioned, did meet the recognition criteria. This is the first question. It will take time for me also, for you also. It will take 2 or 3 sessions. Then automatically you will develop the things. Now, if the payment criteria met, they are talking about, read the question. According treatment of the payments for the app in the year ended on the assumption that the amount meet the recognition criteria. If it is going to meet the recognition criteria, they are talking about the upfront. See the 1, 2, and 3. In the first point, they are talking when acquiring stake in this project, Renshu make an upfront payment, a series of further payments. This is the cost upon fulfillment of certain defined objectives, both before and after the app is given final government approval. prior to the current year, the payments has been accounted for an acquisition as a separate intangible asset, as the price paid reflects its belief that the expected future economic benefit would flow to Renshu. The probability recognition criteria has been met. The recognition criteria is meeting. Okay, the recognition criteria is meeting. Now, we have to write if the payments met the recognition criteria, of intangible assets. Okay? Then automatically, then as per IAS 38 intangible assets, as per IAS 38 intangible assets, is it right? Should be recognized, intangible asset should be recognized. Should be recognized before, okay, before recognized prior to the current period. We should not hold anything. Is that if met the criteria, there should not be any delay. Is it? There should not be any delay. Now, what they are saying, they have revised strategic plan, decided that point number 3, they have revised a strategic plan and decide that all previous capitalized expenses to date to be de-recognized and expensed as research and development cost. The reversal of the current accounting treatment has given concerns. Is that people, why you have de-recognized when you have to, we have told about research and development? No, there should be some rule. Okay, there should be some rule when you should recognize, when we should not recognize. Is that when we should de-recognize the intangible asset, okay, the intangible asset should be de-recognized, when we have to de-recognize only on disposal. Only on disposal. Okay, or when no future economic benefits, okay, are expected. Okay, then only you can de-recognize. You cannot de-recognize as, is it? We cannot de-recognize as per our convenience. Is that in this case, in the above case, both the conditions are not satisfied. They are not disposing of, okay? They are saying that simply we are going to convert to research and development cost. No, we cannot do that. Okay? We cannot do that. Both the conditions are not satisfied and it is not appropriate, and it is not appropriate to de-recognize the intangible assets. Next, anything else?
Plus, they mentioned there is a future economic benefit, so they cannot de-recognize.
In the where they have mentioned?
In paragraph 2.
Period to cut, the payments have been accounted for acquisition at a separate intangible asset. As the price paid reflects, it believed that expected future economic will flow to the Renshu. The conditions has been met. Is that is the reason what we have done? We have identified it as a intangible asset. Why we have identified it as an intangible asset? Because they are good, because their expected future economic benefits will flow to Renshu. Is that will flow to Renshu. Now, if there is any possibility of derecognition, anything is there, think. Think. Intangible assets. Intangible assets. Okay, think. Next time you should think like this. Okay, very simple. Here, now this is the first question. I am giving you space. Okay, next time you think. If there is a possibility of intangible assets, definitely there is a possibility. If the doubts are there, okay, see the thing. If there are doubts, over the recoverable amount. Of the intangible assets. Of the intangible asset. What is there? As on. Okay, as on 31st December. See, this makes presentation of 2 marks. I am very much concerned about those 2 marks. Okay, is it 2008? What will happen? If there are doubts over the recoverable amount of the intangible asset, I am using the word recoverable amount. If I am using the thing recoverable amount, what will trigger in your mind?
Derecognition?
No, recoverable amount. Where we use recoverable amount? Only one place we use recoverable amount. If the carrying amount is more, recoverable amount is less, then if there are doubts over the recoverable amount of the intangible assets as on 31st December 2008, Renshu company should assess. Is it? Renshu company should assess whether, I'm just again giving, whether the intangible asset has been impaired as per IAS 36, impairment of assets. Understand part? Very simple. Is it? First, see, it is the first thing. Okay, if there is a value has been decreased, then we should know whether there is a impairment. Is it? What I am writing the rule? Is it right? The carrying amount. These are the standard sentences. The carrying amount is in excess of the recoverable amount. Immediately, anytime we are coming across intangible assets values, okay, measurement, and remeasurement, definitely what will happen? Then you should think about the impairment. If there is a impairment loss, is it? If 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 any impairment loss, if any impairment loss should be recognized, where we have to recognize, should be recognized in, where in we should recognize. See, impairment should be done every year. Keep it in mind. Impairment should be done at the end of every, once you have started, you have to measure the value of the asset. If you are doing impairment every year, it should be recognized where? It should be recognized in profit and loss. Is that in the this is the first time I am talking about in the operating section. In the operating, this is from where? This is from IFRS 18. Understand point? I am writing here, I am highlighting with the things wherever I am using. This is first time you are using IFRS 18. In the profit, till now what we used to write? In the profit and loss account. But what we have to write, this I will do in every revision section. Revision questions I will do wherever it is there. In the profit and loss, in which there are three sections are there: operating section, financing section, investment section. Like we did in the cash flow. In the cash flow we have activities. Here we have the section. Is that? Here we have the section. Okay. If there is any impairment loss, it should be recognized in the profit and loss account in the operating section. Are you clear about this?
Yes.
Yes, sir.
Okay. Next.
Sir, if we write like this, we get full marks?
100%.
Okay.
If you do like this, I will train only on this. I will train only on the way you have to work. Is it right? Now, anything else? Okay. Next, point number B. Okay, did meet the recognition criteria. If it is meeting the recognition, didn't meet the recognition criteria. If doesn't meet the recognition criteria, what we have to do? Any idea? Fine. Let's see. Renshu company should have considered. This is for the point number B. Should have considered whether the recognition criteria in ISA 38 in IS 38 or, see what happens, see the things, read the question. What is happening? It is the research and development cost. Okay, it is the research and development cost. Internally generated intangible assets should not be recognized. Externally generated should be recognized. That's the most important point. The recognition criteria, IS 38 or recognition criteria for internally generated intangible assets were fulfilled. Okay, were fulfilled. Period to prior to current period. Now the problem is in the middle they cannot do. Okay, in the middle they cannot do. Is it? Okay, now if in the current period, is it? If in the current period, if in the current period, if in the they are recognized in the current, if in the current period it is discovered, it is identified, it is identified that the criteria has not met. Okay, if the current period is that the criteria is not met, what they can do?
They can adjust for the next period.
They have to adjust for the next period. Okay, they have to adjust for the, it is a now. If not met, okay, now not met, Renshu will have to recognize, will have to recognize the prior period error. Okay, we have to correct what happened prior period error. Okay, is it? Correcting prior period error. It's a prior period error retrospectively. Okay. If you are correcting prior period error retrospectively means what? It means opening balance. Is it? It means opening balance of affected, opening balance of the which has been affected, opening balance of the component, opening of balance of what is happening. First take into consideration. Now, if there is a changes, which one is going to be affected? If you are making changes, what will get affected in the statement of financial statements?
Revenue.
Revenue affected. Because of revenue, what is the end result?
Losses or
losses. Okay, if it is a losses, is the opening balance of what? Opening balance of the component of equity. It is not equity, it is a component of equity. What is the component of equity? Component of the equity is the retained earnings. Now you are learning the subject, how you have to work it out. Okay, is that a component of equity in terms of retained earning for each period or each prior period. Are you clear about this?
so they will have to adjust the opening balance of retained earnings for all of the past statement of financial statement of
At least for the current year. Okay, at least for the, we cannot go for all the past years. We have to say, but at least we have to change it for the current year. Okay? At least we have to change it for the current year. The current year is more important. Okay, current year is more important. Now, what happens to research and development?
research is expense.
Research is expense, development is the capital. The reclass, little bit, okay, little bit more technical, okay, read little bit. The reclass, they are reclassifying, okay, the reclassification of intangible assets. Is it? To be expensed. to be expensed as research as research and development. They have incorrectly they are doing the things. Okay, is it now? It is we have done in chapter 7. It is a accounting policy or accounting estimate.
This reclassification?
Yes. In chapter 1 also we have done. It is a policy or it is an estimate. Amount is changing or the rules are changing.
Rules. Estimates.
Estimates are changing. Is it? Estimates. Amount is changing. Is it right? The reclassification of intangible assets is expensed as a research and development. Is it right? Now, it is a policy is changing or it is a estimate is changing.
The estimate. Right?
Think.
No.
Think. Slowly. Everybody think. Again, I will come back to this. Again, come back to this. What they are saying, point number 3, that this reversal of the current accounting treatment, point number 3, line number 3, this reversal of the current accounting treatment has arisen due to concern that the payments did not meet the criteria for recognition as intangible assets and also that the cost will not be recovered in full. Renshu considered this action to be a change in accounting estimate. He has thinking a change in accounting estimate. Therefore, recognize the amount prospectively recharging the payments.
So it's policy.
See the thing. Another. This is the technique. Okay, we have to see. This is where the things will change. Most of the time, and I cannot say most, all the time, repeatedly, I will prove it in every question. Every question I will prove. They will do something wrong. Actually, they have to do something different. They will do something wrong. Because their reclassification is the accounting policy, not the estimates. Okay, they think that it is an estimate. Okay, change in the account. It is not a accounting estimate. Is it? It is a accounting policy. Always keep it in mind. 100%. There is no percentage of doubt. They will do something wrong. You should understand. Is it immediately how you will do? You will think whether it is an accounting estimate or it is an accounting policy. Estimate means value will change. Now what you are doing, you have been identified as an intangible asset. Now you are doing a reclassification. When you are reclassification, you are changing the entire canvas, spectrum of the things. Instead of showing in the financial position, you are expensing it into profit and loss account. And we have to make things. Research is different, development is different. We cannot say both are going to be same. Okay, Renshu considered this action to be a change in the accounting estimate. This is not a change in accounting estimate. Is it? As per Renshu, this is a change. This is a change in accounting policy. Is it? This is the change in accounting policy. This is very important. You have to highlight this point. This is a change in accounting policy. And you have to support with some we have to support with what is the reasons. Okay, we have to support with the reason. Is it? Why? What is the estimates? You have to mention. What will happen when new information comes? Okay, when new information comes, is it? When new information arrives, okay, estimates must be revised. Estimates must be revised. Okay, estimates will be revised when new estimates comes. Okay, that payment for the app. Okay, payment for the app. Is it right? Payment for the app are not estimates. Is it? But not estimates of the cost of developing the asset. Okay, the cost of development of asset. Is it? No. Last one. Okay, last one. I will close this. You can understand the summary. You can make it a point. If the payments were intangible assets, they should be recognized for impairment.
Why, sir?
If it is an intangible asset forever, there is no life period. There is no life period. Okay, there is no life period. If there is indefinite life, we are using impairment. If it is a definite life, we are using the amortization.
Okay.
Okay, are you clear about this?
Yes.
Yes.